Welcome back to Trading 360. Time for our 360 round. We're focusing on the discount retailers, and some of these names have been doing quite well. For example, we've heard from TJX, parent of TJ Maxx and Marshalls, and Ross Stores. Ross Stores right now is up about 10% on the heels of its earnings. Dollar General reports next week. So let's take a look at this segment more closely. Amanda lies with us, Director Macmillan Doolittle, and Sandra Cho, founder, president, Pointwealth Capital Management. Thank you both for being with us. Sandra, it was interesting because within your notes, you talked about people having a preference for store brands over their good old favorite brands. Are we seeing a shift?
Yes. Hi. Nice to see you again, Nicole. Yes, I think we definitely are, as inflation has kept steady and is, slowly coming down, but still high. We're seeing consumers really kind of being pinched. So what's happening is they are moving more towards store brands as, for example, their credit card debt goes up. They are more careful about how much and what they spend their money on.
Yeah, understood. Are you feeling much of the same, Amanda? What are you seeing?
The results, I think, reflects the attitudes of consumers. Looking at TJX results and Ross's results, they're certainly remaining resilient, even as conditions change. Even when consumers were flush with cash in 2021, they were performing well. And looking at the most recent earnings releases, they've had consecutive quarters of comparable store sales growth, seventh consecutive quarter for TJX and the sixth consecutive quarter of comp store growth for Ross. So consumers are speaking with their wallets and continuing to seek out value amid economic uncertainty.
Are these stores in the right place at the right time? Because we're going to be getting some more earnings, right? Dollar General is coming up, and we'll hear from Foot Locker and Burlington and Best Buy. But when we stick to some of these more consumer-friendly, lower price, Sandra, are some of these earnings that are due out, are you expecting some good numbers?
Yes, for the discount retailers, for sure. It's really going to also depend on what their focus is. So, for example, we've already seen that with Walmart really doing, well as far as gaining some market share, beating expectations. And that's because, they have less of a focus on consumer discretionary items like, for example, Target. So Target not performing as well. So I think that trend is really going to continue as far as the sector goes. Discount retailers should be trending more and more up as the consumer is squeezed.
Yeah, and it's interesting that you picked Target to make that reference to, because there really is this feeling that Target it was the darling, right? Everybody loved Target. The stock was running hot, and then it just sort of fell out of favor. And then the likes of TJX and Ross Stores, Walmart. Walmart was definitely a favorite pick of so many of our guests. Amanda, would you say that those are better positioned now, names like Walmart, over Target?
Yes. Target, when you look at their category sales performance, they're losing share in sales when it comes to home, as well as other home retailer brands like Beyond. In contrast, brands like TJX and Ross have really reported growth in those categories. So we're likely seeing some share being stolen in categories like home as well as apparel. And when retailers like Target or more apparel-focused brands like Nike and Lululemon, who have seen slowdowns in sales growth, are performing poorly, it's really a great opportunity for some of these discounters because they start to scoop up some of this excess inventory and continue to win with consumers.
Yeah. And I'll give you the last thought here, Sandra. You talked about Dollar Tree's CEO, and he's looking at some of the shoppers' take-home earnings, and you're seeing some folks who make some decent money, and they're running over to Dollar Tree, right?
Exactly. I mean, they saw an increase in upper middle class households that earn $135,000 or more going to Dollar Tree, going to Dollar General. And, we continue to see that kind of trend. That said, I will say, you shouldn't not look at the luxury brands because they have also become kind of bellwethers. I mean, we used to think of them as consumer cyclical, and the possibility or the danger of them trending downwards. Don't get me wrong, we do see a slowdown, but they're still having consistent profit. So, for example, LVMH, which owns Tiffany, and you're seeing Hermes. You're seeing these increases in their revenue as well, not just the discount retailers.
Yeah, I'm glad you brought that in to the conversation. Thank you both so much. Wonderful to see you. Sandra Tro of Pointwealth Capital Management and Amanda Lai of McMillan Doolittle. Thank you both very much.